As is our pleasure to welcome in Suresh Sethi, MD and CEO of Protean eGov Technologies. They came out with a quarter wherein the revenues were down 8%. Margins came off a little bit as well. Let's get him in on the screen when we ask him the first question about his quarterly numbers. And Mr. Sethi, the question is, while the street is used to fairly strong performance in the previous quarters, what went wrong this quarter? Why the margin downtick on a quarter-on-quarter basis?
Yeah, Neeraj, good morning. Thanks for having me here. So Neeraj, very quickly on the overall revenue.
Sure.
The revenues
Let's start with that,
down. Yeah, the revenues are down this quarter primarily because of the PAN numbers, the taxation business, where we have seen there has been a compression in the market overall. Largely, it was led by the fact that last year there were some significant scheme launches and Aadhaar PAN linkage deadlines, which haven't come about this year. So while we clearly believe there's a strong story, as we've always said, that the PAN penetration in the country is not more than 35%. But due to some of these trigger events, the numbers last year were higher. And that is where we see a year-on-year reduction. And that has been a contributor. But the good story from our part is while the overall market shrunk, we've increased our market share. And that in a result has arrested some of the low numbers which we've seen at a market level. And that is where we see it now. So it's reasonably flat as we look at year on year.
So, Mr. Sethi, good morning. Tamanna here. In terms of these events that you're talking about, are you referring to Aadhaar PAN linkage, which pushed up numbers last year?
That is right. That is right. So last year, Tamanna, let me put it, maybe elaborate more on it. Last year, the numbers had a spike to it. So when we do a year-on-year comparison, the numbers look lower, but the headroom clearly is there. And that is what I meant by saying that PAN penetration in the country is around 35%. And therefore, definitely this continues. But what we saw was the fact that last year there were some spiked volumes because of some scheme issuances, which is DBT schemes, where PAN in some cases is mandated to be provided for availing the benefits. And likewise, in case of Aadhaar PAN linkage, we did see a spurt as there was a deadline approaching in this quarter last year.
No, so that was my point, Mr. Sethi, and I agree that PAN penetration in the country is far from optimum. Having said that, though, the two big triggers have now ended, right? Those timelines have expired. DBT schemes, of course, will require more onboarding, but the Aadhaar PAN linkage is expired. So what does that mean for an earnings trajectory going ahead? When I see your margins that have dropped here to 10.3%, is this now the new normal and the 14% that we saw as a comparative was excessive?
No. So, let me first clarify on the first point with regard to the PAN issuance. Now, the PAN issuance is today being linked to multiple things. We've recently seen a new development where IUs have been, or the utility companies have been asked to now allow PAN as a validation mechanism for identification of the stakeholders over there. Similarly, PAN today is used in multiple places. Any new schemes which get introduced. So I'm just picking up one part on government benefit schemes, which could be by the central or the state government. All of these require PAN as a validation. So any beneficiary who's eligible and does not have a PAN needs to therefore apply for a PAN card. That is what I meant. And new schemes are coming in, we see as we go by. Clearly, PAN is today very much a core instrument as part of the regulatory guidelines for account opening. It is used for property transactions. So clearly, there is a thrust for this line of business to continue to grow. So that should not be something that we see. This is just a momentary quarterly comparison year on year. So that addresses the PAN part. And when we look at the overall performance, I think this again has been a blip compared to last year. But otherwise, we always call out two parts. There have been investments into new businesses, and that is where the margin profile has come down. But we clearly see a trajectory where the new businesses are now contributing. And these are largely SaaS and annuity business, as we've been calling out earlier, whether it is our data stack business or the work we are doing in ODEs. And as these gain traction, we will clearly see a move towards a better margin profile.
Got it. Mr. Sethi, so clearly, I mean, the clutch of people who have invested in your business during the latest stock sale that happened as well are all very confident about what happens, not just right now, but let's say over the next 5 years. I would love to understand, sir, as we stand at the start of 2025, how do you view either the next 12 months, because I think 3 years is too long a time in the current scenario,
Sure.
but if you have some visibility there, just leave us with that maybe. I mean, what do you see the next 3-year CAGR performance likely to look like, if you will, on whichever metric, sir?
So Neeraj, I'm not going to specifically
Not a number.
looking number.
Yeah, not a number. I don't want a number, sir.
Let me do a sort of a quick breakup of the businesses. So core businesses remain strong, and I will take less time and talk more about new businesses because that is clearly where we see the new growth momentum coming in. So PAN, pension, and ID, these are the core businesses we have been involved in, and these do contribute over 95% of our top line today. And these we've already spoken about. PAN definitely strong because there is the overall, thrust over there of the utilization of the tax ID in various schemes and various transactions that we do. Pension, a huge thrust again, as we've seen that, the pension remains a core business. We are one of the dominant players with almost a 97% plus market share and strong thrust because as a pension society, we have a 6% penetration, but a pension penetration, whereas in developed countries, the US today maybe is around 70% plus. So again, a good headroom over there, and we see a momentum this year also. We are 12% up compared to last year in terms of our revenues. ID very strongly linked with the core digitization of the country. Now, let me quickly swing into the new businesses. So when we look at ID, we are building a data stack on top of it, which is a value-added service, whether it is a documentation suite like eSign Pro, APIs, and that is what I meant. These are annuity businesses. So there is a consumption pattern, which is there with B2B market. And we have early, sort of penetration into the market now. And whatever we secure as a revenue in 1 month, the same carries on for the next month, and then new customers come in. So it's annuity in nature, SaaS driven. Open digital ecosystems is a big thrust. We see work in agri, we see work in ONDC, and it's a market play because as the network grows, we see our SaaS businesses picking up over there.
Sure.
And last but not least is what we are looking at doing in the international markets, where we take the same stack overseas into different geographies and try to multiply it from there. So we do see the new businesses coming in, and our confidence lies in the fact that these are annuity in nature. So whatever we see as the, the green shoots this year, they will definitely become strong and go month on month next year.
Okay. Thank you so much, Mr. Sethi, for your time and answering all of our questions this morning.